Ever felt that slow squeeze on your wallet when you go to grab your morning coffee? You know, that moment when you realize inflation has nudged the price up just a little bit more. Suddenly, supply and demand isn't just some dusty high school term, it's a reality that hits you right in the pocket. And those terms like quantitative easing, they sound fancy, but really, it's just a way of saying we're printing more money. It's like a magic trick that leaves us wondering where all the cash went. These invisible forces that shape our financial lives are endlessly fascinating. So, I decided to take a closer look at the world of accounting, a place where numbers tell stories about economic trends. You see, accounting isn't just about crunching numbers, it's about understanding the ebb and flow of our economy. It's a narrative that unfolds through balance sheets and income statements, revealing the health of businesses and, by extension, the economy itself. Let's start by breaking down what economics really is. At its core, economics is a social science that studies how we produce, distribute, and consume goods and services. It's about choices made under the ever looming shadow of scarcity. Think about it, every time you decide to buy that fancy latte instead of saving for a rainy day, you're making a trade off. Economics is all about those decisions, how we allocate resources, how markets operate, and how we respond to competition and changes in the economy. Now, accounting, on the other hand, is more like the scoreboard of this economic game. It's the practice of recording, analyzing, and reporting financial transactions. It's about understanding assets, liabilities, equity, income, and expenses. Accountants are the ones who keep track of a business's financial health, providing the information necessary for decision making. They're the ones who help businesses navigate the complex waters of economic trends. But here's where it gets interesting. Economics and accounting are intertwined. They influence each other in profound ways. Economic conditions shape the context in which accountants operate. For example, take inflation. When prices rise, the way we assess a company's financial performance changes dramatically. Historical cost accounting, it becomes less relevant when inflation is soaring. Suddenly, accountants must adjust their methods to reflect the current economic climate. And it's not just macroeconomic factors like inflation. At interest rates, microeconomic factors matter too. Market competition and consumer behavior can shift overnight, impacting how businesses operate. Accountants must be attuned to these changes to interpret financial data accurately and provide strategic advice to their clients. Let's take a moment to explore how specific economic trends impact accounting practices and financial reporting. Inflation is a big one. When prices rise, it complicates impairment assessments. Accountants must rethink their forecasts for future cash flows and the discount rates they apply. If inflation is high, the risks of asset impairment increase, and management must adjust their projections accordingly. It's a delicate balancing act, and the stakes are high. Then there's the recession, a word that sends shivers down the spine of any business owner. During economic downturns, accountants see an uptick in client inquiries about cash flow management and cost-cutting strategies. The demand for advisory services skyrockets as businesses scramble to navigate the storm. Financial statement preparation becomes more complex, with increased scrutiny from stakeholders demanding transparency and accountability. Globalization is another trend reshaping the accounting landscape. As businesses operate across borders, the need for consistent and comparable financial reporting becomes paramount. International financial reporting standards are being adopted worldwide, creating a framework for global accounting practices. This harmonization is essential for investors and stakeholders who want to make informed decisions based on reliable financial information. Now, let's talk about blockchain. It's not just a buzzword, it's a game changer in accounting. Imagine a world where transactions are recorded in a secure, transparent way that reduces the need for manual reconciliation. Blockchain technology introduces a triple entry bookkeeping system, enhancing accuracy and trust in financial reporting. It's a powerful tool that can streamline processes and open up new avenues for business innovation. Automation is another trend making waves in the accounting world. Picture this, software robots handling routine tasks like data entry and invoice processing. It's a dream come true for accountants who want to focus on higher value activities. The rise of artificial intelligence and machine learning means that accountants can now leverage technology to detect fraud, analyze risks, and provide valuable insights. The role of the accountant is evolving, and those who embrace automation will thrive in this new landscape. And let's not forget the impact of the remote workforce. The COVID-19 pandemic accelerated the shift to remote work, and accounting firms had to adapt quickly. While some enjoyed newfound flexibility, others struggled with communication and collaboration. The reliance on technology soared as firms sought cloud-based solutions to maintain efficiency and security. It's a brave new world, and accountants must navigate the challenges and benefits of this shift. Tax policy changes are another significant factor. Recent legislation, like the Tax Cuts and Jobs Act, has reshaped the tax landscape, impacting how businesses report their financials. Accountants must stay on top of these changes, adjusting deferred tax assets and liabilities to align with evolving laws. The complexity of tax accounting increases, especially for multinational corporations navigating diverse regulations. It's a challenging environment that demands vigilance and adaptability. Outsourcing is gaining traction as businesses seek to cut costs and access specialized talent. While outsourcing offers benefits like efficiency and cybersecurity, it also raises concerns about data protection and compliance. Accountants must carefully evaluate outsourcing partners to ensure they meet the necessary standards for quality and security. It's a balancing act that requires due diligence and strategic thinking. Artificial intelligence is revolutionizing accounting practices, streamlining processes, and enhancing decision making. From automating bookkeeping to optimizing financial performance, AI is a powerful ally for accountants. However, it also raises ethical concerns and necessitates a focus on data quality. Accountants must embrace this technology while ensuring they maintain the human touch in their work. Business analytics is another area transforming accounting. By harnessing data and technology, accountants can make informed decisions, identify risks, and uncover opportunities. The ability to automate data collection and analysis boosts efficiency and accuracy, leading to better financial reporting. Accountants who embrace data analytics will find themselves at the forefront of strategic decision making. Data security is paramount in today's digital landscape. With sensitive financial information at stake, accountants must prioritize cybersecurity measures. The rise of technology brings new challenges, and accountants must ensure that their systems are fortified against breaches. It's not just about protecting data, it's about building trust with clients and stakeholders. As the accounting profession evolves, upskilling becomes essential. Accountants must continuously acquire new skills to stay relevant in a rapidly changing environment. This includes embracing technology, understanding data analytics, and honing communication skills. The accountants of tomorrow will be those who adapt and thrive in this new landscape. Finally, we can't overlook the growing emphasis on sustainability. As businesses increasingly integrate environmental, social, and governance factors into their reporting, accountants play a crucial role in this shift. They help organizations measure and communicate their sustainability efforts, enhancing transparency and accountability. This trend is not just a passing fad, it's a fundamental shift in how businesses operate and report their performance. So, what strategies can businesses employ to navigate economic downturns? It all starts with cost control and optimization. Every expense must be scrutinized, and businesses should explore automation and outsourcing to improve efficiency. Cash flow management becomes critical. Prioritizing collections and negotiating longer payment terms can make all the difference. Debt management is another key area. Businesses should focus on renegotiating existing loans and avoiding new debt during tough times. Revenue generation strategies, like expanding into new markets or developing innovative products, can help businesses weather the storm. Financial forecasting and planning are essential as well. Regularly updating projections and conducting scenario planning can prepare businesses for various economic conditions. Communication and transparency with stakeholders build trust and confidence during uncertain times. In conclusion, the impact of economic trends on accounting is profound and multifaceted. As we navigate this ever-changing landscape, it's clear that accountants are not just number crunchers, they are strategic advisors, guiding businesses through the complexities of the economy. By understanding these trends and adapting to the evolving landscape, accountants can help organizations thrive in both good times and bad. So, the next time you sip your coffee, remember that those numbers on the balance sheet are telling a story, one that reflects the intricate dance between economics and accounting.